Nothing broke today, and that's exactly what should worry you going into tomorrow's jobs report. The S&P slipped 0.18%, the VIX fell to 15.15, and the market's telling you it's calm right before the one number that can end the calm. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. So here's the stakes question: if fear is this cheap the day before non-farm payrolls, who's wrong, the tape or the traders selling protection? A VIX at 15 says nobody's hedged. But the Dow just dropped 0.85% while Treasury yields jumped and crude climbed on that fragile Iran-Oman deal to reopen the Strait of Hormuz. When bonds, oil, and the blue chips all move together and volatility still falls, somebody's mispricing risk. Tomorrow's jobs print is the referee. Get a hot number, and 15.15 looks like a gift you should have taken. Look at the split. The S&P off 0.18% to 7,709.96, the Nasdaq basically flat, down just 0.06% to 26,348, but the Dow down 0.85% to 53,885. That's not a sell-off, that's a rotation. Energy led everything, up 1.48% as crude firmed on Hormuz uncertainty. Behind it, communication up 0.28% and healthcare up 0.18%, and that's the whole green list. The bottom of the board tells the real story: industrials down 0.85%, real estate down 0.86%, materials down 0.89%. The rate-sensitive, growth-sensitive corners got hit while energy carried the tape. Underneath, the earnings knives came out. AppLovin cratered 19.66% to $335.67, Trade Desk plummeted after hours, and copper printed its highest level ever. Not a boring day under the hood. A quiet index, a violent interior. And I owe you a mark on myself. Yesterday I called energy to stay the worst sector into today, closing red at the bottom, betting Hormuz talks would pressure crude. Dead wrong. Energy finished up 1.48%, the single best group on the board. The deal to reopen the strait firmed oil instead of sinking it. That's a miss, no spin. Running tally now 15-18. I'm behind, and I'm not going to pretend the scoreboard says otherwise. Here's my read. The sector rotation story we've tracked for a week just flipped its lead, tech's been the engine, and today energy grabbed the wheel while industrials, real estate, and materials all sank. That's late-cycle behavior, defensives and cyclicals swapping seats as everyone waits on the Fed's next read. And the VIX at 15.15, down 4.17%, going into a jobs report. That's complacency wearing a calm face. I'm not saying sell. I'm saying this is the day to check what you do if payroll surprises hot, because at 15 volatility, protection is on sale and nobody's buying it. Watch the 10-year yield first thing, it's the tell before the tape moves. So here's my call, logged. Payrolls hits tomorrow, and I think the VIX pops back above 16 by the close as that 15-handle complacency cracks. That's my line. If I'm wrong again, I'll wear it right here and take the tally to 15-19. Come back and grade me. Same time tomorrow. Subscribe so the ritual finds you.